So I guess if you have to sum up the investment thesis of EL, if you have to buy it today, it's basically the management team telling you, trust me bro. I've never been one that have shied away from bad stock picks. If I talk about the company on YouTube, I'll post that video and I wouldn't delete it just because the stock price tanked to build some sort of credibility. I think this is my own investment journey and I'm here to share my lessons. So transparency is definitely one of the highest quality that I hold quite close to my heart, particularly so in the finfluencer space. So I think case in point, for most of you who have landed on my channel, you probably have seen one of my Baba videos. And if you just pull the stock price or stock chart of Alibaba, they haven't been the best. In fact, it's one of the worst performer for the last 2-3 years. And it still remains the biggest position in my portfolio. And truth be told, because of the percentage weightage, as long as Baba remains beaten down, it's very hard for my portfolio to recover, and I've been extremely transparent about it. That said, I think I remain steadfast in terms of my investment thesis and my conviction around it. I just think that the time is not right yet. And furthermore, I think my videos speak for itself. If you just go and search a few key terms, I've made videos before on Meta platforms, on TSMC when it was coming down. It recovered quite nicely, and they are currently still a sizable part of my portfolio. So I think I just wanted to give an account and an update. It will be a short analysis piece on Estee Lauder's recent earnings. And more specifically, we'll be looking at their recent earnings report and what's my thought process behind whether I'm adding, holding, or just selling out and buying into a different company. And of course, don't forget to smash that cute little like button while you're at it. Now, if we look at the price action of Estee Lauder, it's probably one of the worst performing ones out there this year. Year to date, it's down 56%. On the earnings day itself, they essentially gapped down by 20%. And the following day, they actually gapped up by around 10%. And just yesterday alone, when the stock market closed, it's down again by 3%. So some of you might be wondering, how bad was the earnings report for it to warrant such a huge gap down? So Estee Lauder essentially lost 10 billion in one day. I think long story short, it's not so much about this most recent earnings, but more so the guidance that they have provided. So this headline pretty much sums it all up. EL lowers FY 2024 view despite Q1 earnings beat. I do believe that they beat on earnings, but they miss on revenue estimates. So on earnings itself, Wall Street actually has a consensus that they are going into the negative territory, but they did eke out a slight profit. But this is really the main problem, the outlook. So this management is lowering its fiscal 2024 expectation for mainland China and Asia travel retail. So the management now projects net sales in the range of a 2% decline to a 1% increase. And the company had an earlier expected net sales of an increase of 3 to 5%. So that's the first hit. Second hit, organic net sales growth is now anticipated in the range of 1% decline and 2% growth. So the earlier anticipated numbers was in the range of 6 to 8% growth. So that's the second hit. So the third hit, which is on the bottom line, adjusted EPS is now expected in the band of $2.17 to $2.42. And the earlier anticipated figures were in the band of $3.50 to $3.75. Just diving deeper into the most recent earnings quarter to really see and investigate, is this a value trap or is this a potential opportunity? So first quarter results for Estee Lauder, they are running on a very weird timeline. I think June is actually their fiscal year end. So they are already into their 2024 fiscal year. So net sales actually decreased by 10% and diluted EPS declined to 9 cents. Organic net sales declined by 11% and adjusted diluted EPS decreased to 11 cents. So there were two main issues that were essentially impacting both the growth rate and also the bottom line, which was discussed previously. Namely, the slower growth in the overall prestige beauty in Asia travel and also mainland China. So it is currently confirmed in the pre-sale phase of the 11/11 shopping festival. So just for some context, 11/11 it's the biggest sale event in China, and they tend to start their pre-sale event quite early on, I think 1 or 2 weeks prior, and that's why there's some sort of visibility to the management already on what's the expectations from the mainlanders or the Chinese consumers. And of course, from the management perspective, they're going to throw in some risk of the business operation in Israel, which I really think it's a nothing burger and it's just an excuse that's thrown out. So here's how you can potentially get rewards worth up to $5,000. New users to Weibo can now create, fund, and maintain any amount in their Weibo account for 30 days and win 10 fractional shares worth between $100 to $5,000. So on top of getting welcome rewards, Weibo also offers a global community which allows you to interact with other investors like myself. So you can share your experience, insights, and even tips about the market in this community. Sometimes all you need is an opportunity to bounce ideas with other investors, and I believe Webu's community platform is one of the best to help you with that. Let's say you are currently interested in a stock like Netflix. So you can first search for the stock in the Webu app, click onto feeds, and then you can see a quick sentiment analysis on whether investors are generally bullish or bearish. Subsequently, you can scroll into the individual forums to understand what other investors are discussing about and make your own assessment on whether you want to buy the stock or not. So their current Money Boo campaign is also offering really attractive cash vouchers if you deposit and activate your Money Boo account. So for those of you without a Webull account today, I don't know what you're waiting for. Sign up with the link below now. Thank you Webull for sponsoring this video. But that said, I think in a bigger context, they did hinted that momentum continued in many developed and emerging markets around the world where they have grew strongly and we realized prestige beauty share gains. Encouragingly, we also returned to growth in the US, fragrance, makeup and skincare all contributing. So this performance actually partially offset the pressure of Asia travel retail and a slower recovery of overall prestige beauty in mainland China. I think also based on my own understanding, actually even for the Asia travel retail, most of them are mainlanders. So the biggest culprit here on why Estee Lauder is printing such disgusting growth rate and EPS decline is really because of the Chinese slowdown. And basically people are not spending money anymore. They're not traveling, they're not spending, they're cutting back on expenses. So if you to scroll down in terms of the results of product category, skincare, which is the bulk of their revenue, actually dropped by 22% year on year. You can see that just skincare alone in 2022 last year, 2.1B out of 3.9B. So that's around, I guess, around 50 to 55% of the revenue is just from this one category alone. So it plummeted down to 1.6B. Makeup, probably flat, and fragrance actually went up by 5%. But in the grander scheme of things, the total net sales was actually down 11% year on year. If you were to move over to the results by geographic region, so for the Americas region, it's actually up 8%, which is highly encouraging. So the Europe, the Middle East and Africa, it's actually down 26%, and this include the Asia travel. Don't ask me why, but that's how they categorize their earnings. And more importantly, for Asia/Pacific, it's also down 6%. I think a large part is the Chinese retail consumption. So I think if you dive deeper into it, skincare, which is the most important segment, so reflecting a decline in the company's Asia travel retail business, primarily due to the company's and its retailers' action to reset retailer inventory levels. More importantly, there is also these changes in government and retailer policy related to unstructured market activity back in China. So I'm not going to spend too much time, but you guys should just Google this term called Estee Lauder, 代购, DAIGOU. But anyhow, I think a few bright sparks that we can look forward to. So net sales from The Ordinary increased strong double digits globally and in every geographic region, reflecting continued strength from hero products and successful new product innovation. MAC net sales also grew double digits globally and across every geographic region, owing to the launch of their Hyperreal product franchise. So as you can see, there's a huge drag from the mainland Chinese consumption pattern. But that said, I think most of the other geographic regions, we are experiencing some sort of recovery and normalization. But really, a huge part of the earnings is being impacted by our Chinese counterparts. So makeup net sales actually increased 1%, reflecting high single-digit growth in the Americas and the Asia Pacific, partially offset by a decline in the Europe, Middle East, Africa region due to the challenges in the company's Asia travel retail business. So like I alluded previously, regardless of the region, it's just the Asia travel retail business, which is mostly your mainland Chinese again, and also your mainland Chinese in the Asia Pacific region. So moving on to the outlook of the fiscal year 2024. These are the few assumptions that the management team has guided. So there's a return to net sales growth in the second half of fiscal year 2024. So they said that it's the second half. So for the first half, which is the previous quarter and the upcoming quarter, they are expecting continuous decline. So the full year gross margin expansion, primarily driven by strategic price increase, discount reduction and the lower obsolescence charges, largely offset by manufacturing under absorption. So the contraction in the first half of the fiscal 2024 is expected to be more than offset by expansion in the second half. So what they're essentially saying is that gross margin will probably stay kind of flat, and also the progressive operating margin improvement through the second half of 2024 due to the improvement of the Asia travel retail business consumers and in mainland China. So you can see that now the story is basically quite simple. You are essentially just banging on China's recovery. And we all know that there's a lot of hype, a lot of optimism when China said that they're going to ease out from lockdown in end of 2022. But there's really this lackluster recovery, and that's why many of these stocks that have huge exposure to the Chinese market, they are being impacted significantly. I just want to lay out my very simple investment thesis around EL. So back then, EL was already collapsing. A lot of the guidance, a lot of the growth rates have already been pulled down significantly, pulled down back to earth. And no doubt that it's a recovery play, it's a turnaround play. So we are all essentially betting on the Chinese consumers coming back and they are able to expand their margins, expand their earnings again. Secondly, I think in terms of the brand equity, at least not for myself, at least based on whoever that I surveyed, mostly females of course. So Estee Lauder itself is an umbrella to many of these very prestigious brands out there. I am aware of these huge competitive pressures coming out from all these brandless Korean competitors that are also in the skincare and makeup business. And they are definitely selling their products at a much steeper discount compared to a lot of all these Estee Lauder or L'Oreal brands that they house. But more importantly, let's not forget that we are investing in a luxury business. There is a certain premium, certain brand equity that is tagged to many of their products. And they have die-hard fans. They don't care whether they're earning good amount of income or not, they just buy. But clearly, we can see that EL is not performing up to par. They're not performing up to investors' expectations that, hey, I thought regardless of an economic recession or slowdown, the ladies are still going to spend on these essential products. I think if that's your investment thesis, you might want to re-look into it again. On a side note, I do have an anecdotal story that I wish to share when I was interviewing one of my female friends. So she did share that for some, if not for most people that are using skincare products, skincare is an extremely sticky product because girls wouldn't want to risk, particularly so if they have allergic skins. So when they pledge their allegiance to one particular company's product, they will continue buying and continue patronizing that product. And more importantly, they will go for higher quality products, which was one of the main investment theses that I had when I look at Estee Lauder and their myriad of skincare offerings that they have. But clearly, this investment thesis is under pressure because you can see that at least for the Chinese perspective or the Chinese people, they don't really care. Which is why I probably need to review my entire worldview around the relationship of people and skincare products. So this is basically the quick summary of my investment thesis around EL initially. Firstly, it's definitely a turnaround and a recovery play. You are betting on the Chinese consumer recovery. It's a luxury stock, so there are a few premiums around luxury brands like it's inflationary proof. And of course, in the beauty industry, specifically for skincare, I do know of a lot of people that are willing to pay good money to solve their skin problem. And more importantly, they are generally a lot more stickier compared to your lipstick or your makeup products. But that said, based on the outlook that the management team is guiding, my investment thesis is definitely under pressure. So I've came across this article from Dan where he essentially gave a sell rating when EL was around 135. And clearly he's right because since then, it's down around 18%. So he has given his updated thoughts and opinions around EL's most recent earnings quarter. And I thought that it was quite insightful and I do concur to many points. So here goes. So following the horrific guidance issued by Estee Lauder this morning and shares being down 23% over the last 2 weeks, so results came in roughly in line with expectations and reflected a challenging operating environment for the company, mainly due to its excessive exposure to the skincare industry and the Chinese consumer. So the slump in global travel retail accelerated further with organic sales down 51% year on year. Meanwhile, MAC remains the largest makeup brand and fastest growing brand in EL's portfolio, but without driving an operating profit, I have a hard time getting enthusiastic over the asset. Furthermore, the largest asset, skincare, reported a sales decline of 22%. So as weakness in China persists, EL was forced to lower its FY 2024 guidance by incredible levels. So I do see some upside from management's current guidance, as I expect management to have guided very conservatively in order to take all the pain at once and leave room for quarterly beat over the next 3 quarters. Now, before turning incredibly bearish, I will stress, just as I did in the article above, that the majority of this negative performance is the result of external factors impacting crucial parts of the business. These can therefore, up to a point, be perceived as temporary, not structural. So eventually, growth in China should recover and the long-term growth outlook in the region remains solid. So I think that's also my perception. So I think firstly, it's not structural in nature because I don't think the brand equity of Estee Lauder is being negatively impacted because of some scandal. Maybe they got some bad celebrity to endorse them. And more importantly, many of this temporary in nature really depends on what's your outlook for the Chinese consumer base, whether they're able to come out from this entire property crisis and whether the Chinese consumer confidence will come back again. But that said, I think there's an underlying and more pressing issue right here. However, I believe that the issues for this company and management team are deeper rooted than just temporary headwinds. As I point out in my article, the business has been deteriorating quite a lot over recent years as management seems unable to steer the company in the right direction and has made itself far too dependent on the Chinese consumers and the skincare segment. I slightly disagree here because I do believe that for many of these makeup brands and skincare brands, most of them are highly reliant on the Chinese consumer base. Skincare segment, yes. For L'Oreal, they have a much more diversified revenue mix compared to Estee Lauder, which relies more than 50% on skincare. So as for a large consumer conglomerate, solid diversification is key, and current development highlights a lack thereof for EL. So the fact that the management team did not foresee the prolonged underperformance of the Chinese retail market, while others guided for this 2 quarters ago, fuels my distrust in the company's ability to stir the ship around in the near term and this management team. So don't get me wrong here, the company remains a strong competitor in the beauty and cosmetic industry with an incredibly strong portfolio of brands to leverage, but execution is key. So this is the very qualitative aspect of investment. And as we all know, Valuation 101, it's both an art and also a science. So if you don't trust the management team, you might want to apply a certain level of discount. And if you do believe that the brand equity of the company is worth a certain level of premium, then you apply a certain level of premium. And net, it really depends on where you see this company is going to execute in the next 2 to 3 years. It might take a company a few more years to rebuild itself. And even at that point, I'm not sure if the company will be worth anyone's money, considering that management seems to have no plan in place to boost growth or to improve its sales diversification. So based on his own projection, these are the list of revenue and EPS estimates. So out into FY 2027, he expects revenue to be right around 19.64 billion and EPS to be $4.46. This is a far cry from its peak valuation. So 2027, this is 4 years out. At its peak, the EPS was right around $9.14. So this, to measure it up, it's less than half. So he's expecting Estee Lauder to not even recover to 50% of its peak earnings out 4 years. So based on the consensus EPS estimates among Wall Street and the different analysts, they do have an EPS estimates of $5.43 in June of 2026. He has it only at $4.35, and that's at least a 50% difference. So with the share still valued at 45 times earnings, I'm seeing a lot of downside for the shares as investors will not be willing to pay this premium for much longer with no bottom in sight. So based on the earnings multiple of 26 times by 2025, which is still quite rich, I arrive at a price target of $94 per share. So based on an annual return of 11%, this results in a current fair value of $75 per share, representing another 28% downside. So I think this is extremely debatable right now because there really is no visibility in how EL is going to execute into the next 2 years. And truth be told, if you want to buy EL at current valuations, you have to be upbeat and optimistic of their recovery plans in the next 2 years or so. So I guess if you have to sum up the investment thesis of EL, if you have to buy it today, it's basically the management team telling you, trust me bro. And more importantly, of course, whether you believe in terms of the portfolio of brands that they have, whether is it MAC, whether is it Estee Lauder, whether is it Tom Ford, this myriad of brands that EL is currently sitting on, will they be able to monetize it? And more importantly, the recovery play over at China. How is it going to play out? So I just wanted to do a quick reverse DCF to see that what the market is currently pricing in. So the share price of EL today is around 111, and this is the historical perspective of their cash from operations minus their capex. So I think in 2024, I do expect some sort of normalization. But for those of you who wants to be more conservative, you can actually tag a $1.7 billion cash from op, meaning that they stagnated year on year. But I think based on how the management team is guiding, they are probably expecting some sort of margin expectation on the bottom line with their plans in place. So I also do expect their capex to take a short haircut because they did say that the company expect to drive 800 million to 1 billion of incremental operating profits through the initiative under this plan, which is why I think that they're going to pay more attention in terms of their capital expenditures. So based on the very simple calculation and forward projection, what I'm projecting is the cash flow of EL to reach its peak level within the next 5 years. So you can see in 2028, their cash from operations to go back to around 3.6 billion. So this is on a growth trajectory of around 15, 20, 20, 15, and then 10%. I'm tagging a terminal free cash flow multiple of 15 times and using a discounted rate of 9%. So if you just look at EL's historical price to free cash flow, it's trading right around actually 20 times, 20 to 30 times. That's the middle range. You can ignore these recent numbers because these are inflated due to the huge reduction in cash flow figures that they are posting. You might ask, oh, isn't 15 times conservative? I mean, that's the whole point. I want it to be conservative. If you want really a very huge increase, if you just put 20 times, you can see that the price target will be $141. I just want to see how the market is discounting EL's valuations today. So at $110, I'm assuming that it's the target price, which is the expectations. 15 times multiple, 9% discount rate, hopefully some sort of recovery, 20% growth out into the near future for their cash from operations. And out into 2028, I'm just projecting a cash from operations to be near its peak level in 2021. So I don't know if this is conservative enough for you, but if you do believe in terms of the Chinese consumption story, then I do think that these numbers, EL is probably able to deliver on it. I think circling back to my own personal circumstances and portfolio, some of you might be interested asking me, hey, Chikeng, are you interested in adding to your EL position because you deem the valuations to be fairly attractive, at least on a risk-reward perspective? I think the short answer right now is no. Not because I have lost trust in the management team or the brand equity, but that said, at least for me, on a portfolio level, I initially started on the journey to want to diversify out of relying on the Chinese consumers. But I can't help to keep buying into companies that are heavily reliant on this Chinese consumption recovery story. But truth be told, I'm more interested in accumulating more US-centric and US-based companies. And I already have a huge amount of exposure for the Chinese consumption recovery. Think about Alibaba, Tencent, Chinese banks, Haidilao. All these are very China-centric. So I think moving forward, I don't necessarily think that I will sell off my Estee Lauder position. I'm giving them another 2 to 3 quarters to monitor how management team is going to execute and whether they are able to fire on all cylinders. I might relook my entire position again, whether I'm going to sell or I'm going to hold. Right now, it's a hold. For me to continue adding, I need to see some sort of normalization, optimization, and optimism moving forward. So hope you guys enjoyed the discussion. Feel free to leave in the comment section down below if you guys have Estee Lauder, if you guys are interested in it. And I'll see you in the next video. But more importantly, I'll finally see you on the moon. Goodbye.